to another episode of the AI Cash Grain podcast. I'm Satish Nandapurkar, Director of Data-Driven Strategies for Quantum Hedging. As always, I'm going to start out with a disclaimer. We do recommend futures and options trades every now and then. And just remember that the risk of loss in trading futures and or options can be substantial, and you must consider whether that is a suitable investment. So let's get to the week that just passed. First, of course, we're going to go to Cy Monley, and he's going to talk about the spikes that we had to the upside in both corn and soybeans. Corn was up 16 cents at 4.18. Soybeans was up 45 cents to 10.65.75. Cy will talk a little bit about what happened and whether he sees that from a trader's perspective continuing into the next month or so. Kevin will then come along and talk about what he's seeing in the data and what the prediction models are seeing. With respect to corn, he's seeing continued sideways movement. The models are neutral, could go up, could go down. Soybeans is leaning up. So even despite this move this week, soybeans is leaning a little bit up, where there's about a 60-65% probability it will continue to go higher into the next month. It is a good seasonal period for soybeans. Now, the simulations, when we look at what the simulations are saying, we're 70% sold. End of month is Monday. So September 30th is Monday. We're going to go ahead and issue an advance rec on Monday, which is to sell 15% of our corn on Monday and to sell 15% of the beans on Monday as well. That's in line with the benchmark in both cases. I know the beans are a little bit bullish, but they're not bullish enough to take a chance at this point on being undersold. So the rec is to sell 15% of your corn, 15% of your beans on the close on Monday. Cy, what are you seeing and what do you think with this rally?
Well, thank you, Satish. From a fundamental trader's standpoint, the corn market and the bean market are on the upper end of the ranges. I think we've had some interesting news here. We'll start with soybeans. You know, we've talked about the soybean oil market and the global oils being relatively tight. Well, we've seen the big short covering in oil, and then on Friday we saw the big short covering in meal off of the Hurricane Helene issue, causing some of these plants to be down. Now, I do think, you fast forward 7-15 days, we start to get halfway through this insurance pricing, and all of a sudden this insurance put that a lot of these farmers have on starts to decay. So I would think as we get past the next couple of weeks and into this harvest pressure, if the market wants to make a little push higher, that might be enough as this harvest continues. Now, the other thing we're looking at is South American weather, and our guy starts to look for, and I think a few other traders are talking about the weather turning better and turning into their rainy season. So you get a big crop out of Brazil. Yeah, there's some issues, if they don't get it planted, and that's probably some premium here, but we're bumping into some high levels with some bearish news coming on. I wonder, do our models pick up on that, Kevin?
Hey, Cy, thanks for that. We had a nice little rally this week. Some of that's a reflection of maybe some harvest jitters if the crop will be as good as we expect, and also what seems to be some problems in South America in terms of early season dryness. So, unfortunately, our corn model is not showing a lot of life here. We're seeing not a ton of upside. I might note to our listeners that we did switch to the March contract here. We've been focusing only on the D's contract, but as we get close to the end of kind of the effective time period for the D's, we've rolled to the March, so you can see kind of longer term where it might go out to the first of the year. So right now our corn model is pretty flat. There's not a ton of seasonality to pick up on this time of year, a little bit of a bounce usually starting about now, starting in September, into September and leading into October. We get that kind of, harvest bounce, mostly, pretty minor. And so, our model doesn't seem to disagree too much with that. But the expected strength of that rally is not very strong. according to our model. And so, as we look at kind of the next few months here, the prices for the March contract really kind of hovering in that 430, 440 range with not a lot of directional leads from the model. On beans, on the other hand, we're seeing a lot more strength to the upside. And some of that is definitely tied to seasonality. We see fairly strong seasonality at this time of year, leading all the way into the next calendar year. And so that's certainly supportive. Our model is also picking up on some other things like some technical indicators that got hit this week. And so they're showing up in our model with all the price action that happened this week. And so, I think that is kind of indicative of also what the market is talking about, which is this dry weather problem in Brazil. Temperatures have been extremely hot for this time of year, very unseasonably hot. And we already are in a situation of pretty extreme dryness with the prospects of a very high likelihood that a La Nina will develop in the next few months, which adds further pressure to the Brazil and parts of Argentina's soy crop. So with that, we do have some better news as it looks for soybeans with better prices potentially in the cards as we move forward. So that's where we're at. I'll turn it over to Satish.
Thanks, Kevin. And now for those recommendations. As you know, our goal with cash grain product is to beat our benchmark. The benchmark is a pre-specified strategy of selling a percentage of bushels, a pre-specified percentage of bushels at the end of every month from January through October. Our goal is to beat that benchmark average price by relying on our model forecasts and deciding whether we want to be oversold or undersold relative to that benchmark, and we try to maximize the win probability and get in the range that we said we were targeting, 8 to 12 cents in corn and about 10 to 15 cents in beans. So with respect to this week, we are 70% sold in corn. We're matching the benchmark. We got oversold back at the end of May. It was a good time to get oversold. We got ahead of the game thanks to that. As for this particular month end, at the end of September, which is Monday, we're going to recommend staying in line with the benchmark, which is to sell 15% on the September 30th close, which is the Monday close. That'll maintain a neutral stance with no deviation from the percent sold benchmark, and it should get us into the end of this program with about a 9.5 cent outperformance versus the benchmark. So we will end up picking up about 9.5, almost 10 cents outperformance against the benchmark, which is right in line with what we were targeting. With respect to soybeans, we're also recommending a 15% sale of your bushels on the Monday close. We're 70% sold. The benchmark is 70% sold. We're right in line. We got a little oversold at the right time. We probably closed off that oversold sell a little too early in the middle of the summer. Didn't catch the remainder of the move down. But we did get a little bit ahead of the game. We're tracking to be about 5 cents better than the benchmark by the end of the program next month. We're maintaining a neutral stance, even though you saw a forecast that was a little bit bullish, because it's just not bullish enough. It's just not convincing enough for the models to say it increases the probability large enough to be undersold at this point. So it's recommending staying in line with the benchmark, selling 15% on the Monday close. That's going to be the recommendation. And so, as I said, we'll be almost 10 cents better than the index going in to the end of this program. We'll be almost 5 cents better than the index with respect to beans as we end this program. So just a quick recap and summary, and I really want to focus on these recs at the end. Corn had a nice spike of 16 cents. Beans had a nice spike of 45 cents. Cy came along and told us, despite these spikes, what he sees as the headwinds for corn and soybeans to keep going higher. He believes there will be significant headwinds for us to go any higher from here. Kevin looked at the data. Corn is very neutral in terms of what the data is telling us as to where it could go. Soybeans, on the other hand, leans bullish, just leans a little bit bullish in the short run. Over bearish. But despite that, with respect to our recommendations, the simulation models told us to stay in line with the benchmark. We're 70% sold in corn, 70% sold in beans. So the rec is on the Monday close, sell 15% of your corn crop, sell 15% of your bean crop. In both cases, we will be 85% sold at the end of September, and that'll be in line with the benchmark. So to sell those on the close, that's what we'll be doing in our model portfolio. And then we'll have one more month to go here in October. So we'll again, next week on the AI Cash Grain podcast, where we'll just talk about some other things and other seasonality that's coming up, and we'll talk about where we're taking this podcast and what we're doing with our service as we move forward after the end of this service product, our 10 months with AI Cash Grain. Thank you for being a subscriber. Thank you for being a listener. And again, we'll be with you again next week.